How do I report income from multiple sources? W-2, 1099, rental income, etc.
You should be receiving tax documents for a lot of these things, right? So a W-2, you'll report that. That gets reported on your line 1 of your 1040. Pretty straightforward. Now, whenever you start getting 1099s, this is where you need to look at the type of 1099 that you're getting, right? There's 1099 NEC. This is for any type of like contractor work that you would have done, right? So if you're self-employed and you went and performed work for someone, they'll probably give you a 1099 NEC. The income from the 1099 NEC, a lot of times that gets reported on your Schedule C. That self-employment income, Schedule C. If you get a 1099 MISC, a 1099 MISC, a lot of times rental income will be reported on there. Rental income gets reported on your Schedule E, right? I've run across a lot of tax returns where someone will have a short-term rental and they'll report, or their tax professional will report the short-term rental on their Schedule C, and that is not something that you do. Short-term rentals go on Schedule E, they're just non-passive if they materially participate on your Schedule E. The only time you would take something like a piece of real estate and put it on your Schedule C is if you're fixing and flipping, or maybe if you are performing some type of like hotel, like if you have like a hotel, hotels will get reported on a Schedule C. So now you also have 1099 DIVs or 1099Bs. These can be your dividends. You also have your capital gains. 1099 INT is your interest statement. All of that gets reported. 1099 DIV and 1099 INT, your interest and dividends, that gets reported on your Schedule B. And if you have capital gains, that gets reported on your Schedule D. Now, there's a lot of things you need to pay attention to. One of the most commonly missed things I see on a Schedule D is, let's just say someone has a large year or has a year where they have a large capital loss, right? Capital losses offset capital gains, but when you've offset all your capital gains, you can use $3,000 of capital losses to offset your ordinary income. Anything excess gets carried over to future years. I have seen tax returns where people or the preparer forgets to carry over those capital losses. So that's something to always keep in mind whenever you're looking at your Schedule D.